What's going on, everybody? This is Jordan with Conquer Trading and Investing. In this video, we're going to take a look here at the markets. We're going to be taking a look at the S&P. We're going to be taking a look at the Nasdaq, as well as the Dow. And we're going to answer some very important questions. Specifically, is this the beginning of a crash of a market? Is a crash inevitable? How do we prepare ourselves? Is that the case? Or whether or not we should be looking to go ahead and buy the dip over here, leaning in over here. Is this the chance we've been waiting for? Before we do that, I want to look at a couple of things with you. I want to look at intraday. This is the S&P. You're looking at the 330 ramp going into the close. Obviously a lot of buy programs were set off. Algos doing what they do, perhaps with the aid of the PPT, the plunge protection team. But this over here is interesting. Now, normally by the time you notice something that's occurring in the markets, it's too late for you to continue taking advantage of it. But nevertheless, this might help some traders who are holding on positions late in the day, maybe consider taking some profits. We've all been aware of this, but here's a nice graph showing that since May, you could see the red line is the overnight session. You could see the overnight session has absolutely put in much higher gains than the day session during the New York session. And you could see over here in green, lots of the losses, lots of the selling is coming during New York. A lot of the buying is coming from overseas. What to make of that, I don't know. I just know what it is, and that is what it is. Let's take a look over here. Let's jump into the S&P. Let's look over here at the 8-hour time frame, and this is what I want you to focus in on. Now, quick overview on the 8-hour. This is where we were overnight. We did that slow rise again overnight. We were looking over here together. We were looking, let me jump down to the 30-minute time frame for you. We were watching here as we were getting ready for the consumer confidence number at 10 o'clock a.m. on Friday. And we spoke about we were looking for a reversal in this area, starting over here, starting up right where we were, 30.88 all the way to 30.96. We peaked out before the consumer confidence numbers up in that area. And then the next thing we did is we went ahead and added this channel over here. That's just a little bit of a guide, right? We added that channel. We added both sides just to show that it was a channel. And then we said, caution if you get a break to the downside. And there it was up until we saw the 330 ramp to the upside. Where does that leave us right now? Where does that leave us right now? That's what we want to take a look at. We're going to do that on the 8-hour. We're going to pull up the true trend. If you're not using the true trend, just simply go over here to where it says indicators, right? Go ahead and search true trend and then just double click it to add it to your chart. Now, over here, what we're looking at is obviously this looked like a nice continuation pattern here to the downside. Negate the 330 ramp, and this day closed down pretty decisively. Now, this is often a pattern you see when you're seeing the market sell off one way, whether it's rising or falling, in this case falling, and then you see two price bars like of this consistency next to each other. Normally, if the third one takes them out, that is obviously the sign of a downtrend continuation. Where does this leave us? It leaves us kind of neutral. I know that people are looking to answer one of two questions. I'm going to show you why we're neutral. Now, people are asking, well, three questions. People are asking, how do I prepare for the crash right now? Because people are really kind of programmed right now to believe that we have one of two emotional reactions. Either the markets are just going to keep going euphoric and bullish and up, or they're going to crash. But markets also consolidate, and markets also figure out a range. I think that's where we're going to right now. The market is processing new information, whether or not we're going to see further increases in COVID, whether that's going to cause any possible lockdowns. On Friday, the CDC did say, regardless of the White House says, if they need to, it could be a possibility that further portions of the country go on lockdown. They're talking already about Houston going on further lockdown. Now, I don't know about all that, but I don't think that we're going to crash. I'm not even thinking at this moment that we're going to be revisiting the March lows. If we start breaking down technically, if we lose this area over here, if we lose this area between 28.72 and 28.55, if we lose that area at that point, then we could start getting a lot more bearish, as we should be coming in at first to 26.29, and then if we don't hold that, then much lower. But right now we're still maintaining this bullish structure we have going on here on the equity markets. We're looking here at the S&P. We'll look at the Nasdaq in 1 second to answer another very important question. And that is whether or not, if you trade the futures, that an island top would affect you. But we will look at that. But right now we're looking at what's going on, and we could see the price was irrational. It's come back to reality. Now it's figuring out what to do next. You can see that price is so far holding this area of support, right? So you could look here at the true trend. You could see, well, it's kind of neutral. It looks like it could be rolling over, but if it rolls over, it could be something like this. It could be an opportunity to go ahead and lean in and start building a long position, especially as long as we're above that zone I showed you between 28.55 and then 28.72. In that zone, above that zone, we're looking for further bullishness and extension. So where that leads us is on the S&P specifically, is we need to first find out what happens overnight. Now we're expecting perhaps a little bit of a drift overnight during Asia, during London, and we're going to have to see what happens pre-New York and going into New York. Right now, and I think some of you are starting to truly understand that right now, being on the sidelines is the better position, right? Right now, being on the sidelines is the better position. We're waiting, and we're picking our spot to attack. We make more money that way. You don't always need to be in the market. People were looking over at the Nasdaq, and I want you to see the Nasdaq over here. You could see over here on the daily time frame, what you're seeing here is a big reversal pattern. You're seeing an island top. Why? You see over here a lot of buyers getting euphoric chasing this, and then all of a sudden the market gaps down and they're caught on the wrong side. They're caught on the wrong side. They're still in the hope phase, hoping that this is going to come back their way, right? And if this keeps trading lower, they're going to have to come to the sober reality that they're on the wrong side of the trade, sell, and that's going to cause further pressure here on the market. Now, people are wondering whether or not you trade the futures where you don't have the gaps, if the same technical pattern's taking place, and it is. All right, because it's the same market you're looking at over here. Both are interconnected, and here, whether or not you have access to trade overnight or if you're just trading the day session, the market dynamics are the same. You have to consider both. If you're trading the futures, also consider the index. I'm not a gap trader. I don't trade gaps, and the reason being is because gaps could remain unfilled for a long time. Look at this over here. This is just where my eye was drawn. Now, this was the start of the crisis. By the way, that's something that we need to start speaking about tomorrow. Really, what set off the crisis in the markets was the dollar shortage. Does that have the possibility of this month of showing itself again? We're going to be taking a look at that this week. But right over here, you can see this gap is really what set things off. Or perhaps it was this smaller one over here, right? But nevertheless, it was a gap that did not go filled. For quite a while, right? A couple of months. But look at the downside before it was filled. Gap play, fading gaps is not a strategy. Careful out there. So what else do we want to look at? We just want to check in real quick. We want to check in on the Dow. The Dow also is coming down to an area where it could find support. Follow my mouse over here. You can see over here the two resistant touches. This was a support touch. Over here, this is also support. So the Dow is approaching an area of support. What about the Nasdaq? Let's check that out. Nasdaq is obviously looking like it has a little bit more downside, and that makes sense because it came up higher than the other two. So the Nasdaq could actually fall back a little bit further. There is further caution on the Nasdaq, and the S&P. The S&P, by the way, is looking quite similar, coming down now like the Dow into an area of support. It's getting close. So my instinct, this is the CFD here, the S&P 500. My instinct is that what I'm going to be looking to do is I'm going to be looking as we further test this area of support. I don't think we go straight up. I don't think we go straight down. But as we are working our way sideways, with a little bit of volatility as we lean in towards that support. That might be the area that I look for in trying to lean long. So what does that mean here if I'm on the 8-hour time frame? Not that I'm necessarily trading the 8-hour time frame on the S&P, but it's a good way to get a look at the market. Now that could mean over here that the true trend as we come in towards that area of support I'm talking about, especially towards the level of 28.72, 28.58, that little pocket of support, as well as anywhere from let's call it 29.72 and below. As we're in that area, the true trend will be negative red, but anytime the entry CCI is also oversold towards the trend, that might be on a resumption out of there where I'm looking to pick up buys. I might be looking at it intraday. I don't know yet. I'm just trying to develop a plan from a deeper perspective going into the week ahead. I'm going to take it as it comes. We're going to take a look at Monday's overnight price action. We're going to take a look at how that leads us into Monday's day session and see whether or not there's any opportunity for us. I'll see you all Monday morning. Hope you all have a wonderful weekend, and I'll talk to you soon.